You're the owner of a small business, which means you're also the tech guy, and HR, and personal assistant, and head honcho, and intern. You could use another pair of hands, like the experts you'll find at Verizon Small Business Days, April 21st through 27th. Get a free tech check, special deals, and more. Call 1-800-483-4428 or visit verizon.com/smallbusiness to book your appointment. Verizon Business.
Reality radio for a really great future. We're talking real money.
This is radio that is truly about building your best possible future. This is a show about making your life better down the road. It's called Talking Real Money, and it is brought to you every single weekend by the two of us. I'm Don McDonald. That's Tom Cock. Glad you could join us. If you're here for the first time, it gets good later. 855-935-TALK is our number.
Wait a minute, that's assuming it's not good now?
Well, we're off to a slow start. We haven't done anything yet. But it gets
it's only
better
been a few
with time.
seconds.
Yeah.
Okay, all right. Fine,
it
good.
ages well.
Okay.
It does.
All
We
right,
have people who've listened to every one of our podcasts, so it must age well.
Okay.
And by the way, you can listen to us all the time if you want. You could binge listen. You just get done with this. You go, wow, okay, he was right. That became more fun after a while. And then you could just get on your phone or your iPad or your computer or whatever, or your smart speaker, and you could just binge listen. Binge listen to us.
Do I sound better on those speakers than I do on the radio ones or not?
It depends on whether you're listening on the AM or the FM band.
That's a good point. Good. I'm way better on FM than I am on AM, just saying. So
really? Is that just anecdotal, or do you have research
I'm just throwing
to
stuff
back
out
that
there.
up?
You said the show was off to a slow start.
I just wanted to know if you had stuff to back it up, because we're big believers in research. We don't just anecdotally throw things out.
Yeah, you're right, and I'm gonna retract that statement and say I never sound good. Just leave it at that.
Okay, there you go. I sound good, but I don't look good. 855-935-TALK is our phone number. 855-935-8255. Self-deprecation is an important part of our program.
Indeed, it is. You'll get you better. Your life will be better if you can do it.
You can call us and ask any question that has anything to do with money. Whether we answer or not is another question entirely, but we'll give it a shot. 855-935-8255. Lately, is it just me? Lately, I've been reading just tons of articles in like Barron's and Forbes and all these places where I go to read about money. And there are all these idiot authors talking about how 60-40 is dead.
And what you're referring to there is having a portfolio that is 60% in stocks, 40% in bonds. It's been the traditional balanced, everyman portfolio, especially if you're in retirement, because the idea here is you could take out 4% of that a year. It would sustain itself for a very long period of time because you're getting growth from stocks, holding the value with bonds. Yeah, I'm reading a lot of the same stuff.
They're saying it's dead because interest rates are low. Well, isn't that part of the process of markets changing? Interest rates rise, interest rates fall, interest rates rise, interest rates fall. And they're all pushing weird stuff. Like really eclectic, stupid stuff as an alternative to a stock and bond portfolio. So I'm I need you to unpack it for me.
Let's a little bit first before you get into the alternative, if you will. Yeah. Because what we're talking about here is if we didn't know you at all and you were retired, you could use a 60-40 portfolio, right? I mean, the idea here is to try to make 7 or 8% a year on the stocks, a couple percent a year on the bonds, it's made far more than that in the past. That's enough to sustain your portfolio. We don't know anything about you. You could lose a lot of money because in that portfolio in 2008, you lost probably 30% of the value. You got to be able to deal with the ups and the downs. And what these authors are telling you, what's troubling me is they're telling you, look, the future looks like this. We don't have no idea what the future looks like for stock and bond prices generally, right? You don't know. I don't know. Looking back, this has worked. But what they're really saying, Don, is that you bought stocks And you bought bonds because bonds went up generally when stocks went down. Why? Well, because interest rates were reduced by the government, et cetera. That pushed bond prices up. So you made money when stocks went down. That is not the right reason to be in a 60-40. First of all, you need to decide what your asset allocation is in the first place.
60-40 isn't necessarily right for everybody. It's just sort of this base, the set point from which we adjust up or down depending on your need for and tolerance of risk. It's just a very typical kind of middle-of-the-road average portfolio.
Yeah, and so right now rates are very low, right?
Yes.
They're very low. I mean, historically low. They're very low. So what does that mean about bond prices moving forward? I really don't know. I mean, you're going to say, because how long have we been saying rates are going to go up? 10 years, 12 years, a long time.
Yeah, probably.
Yeah, well, since
2009, 2009. Yeah, rates are bound to go up. Everybody's been saying
they have to.
Well,
they have to go up.
They haven't yet.
They haven't yet. And the other thing, people saying stocks are overpriced. Maybe not.
Only and really only if you're talking about large U.S. growth kind of tech stocks. Otherwise, lots of companies are way underpriced. So it's hard to speak in generalities, but 60-40 is not dead.
Tom and Don are talking real money.
Before you end up buying a financial product that you'll regret later, either call us on the podcast or the show, or if you need a little more time, that's why we offer free meetings with our fiduciary advisors at Vestory with no cost, no obligation, and no high-pressure sales pitch, I promise. Just give us a call at 800-386-3004, or better yet, just set up an appointment at vestory.com, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
Hello again. I'm Don. That's Tom. Money is our game. That's what we talk about here on Talking Real Money. And you can ask us questions by calling us at 855-935-TALK 24/7. You can even call when we're not here, and we'll still answer your questions. Or you can send them in at talkingrealmoney.com on the contact form. So either way it works. We have quite a few emailed in questions too today, so we'll get some of those in.
Been getting a whole bunch. People, you're shy, you don't want to call, but you want to have your question. That's fine.
Because listener numbers are soaring. We're averaging over 2,000 a day.
It's crazy.
2,000 podcast downloads a day. Over that.
Love it.
855-935-TALK. And we now have a call awaiting us. Don, welcome to Talking Real Money.
Hey, Don, how are you?
Tom, how's it going?
Good. What's
Let
up?
me set the stage real quick. Somebody just called me. It's a good friend of mine. They do not sell, but they're always looking for a good deal, and they got a little group of about 8 of them. So I have the same opinion you have about annuities. This sounds like one. They said, hey, they've been offered this investment. They're going to earn about 5.5%. If the market goes down, they'll never lose money. My question to you, because they invited me to go to this meeting with them, what questions should I ask that may benefit them? Because most of these people,
first of all,
all of them, make under $100,000.
Okay, first of all, Don's going to give you that, but we're going to give you a wire to wear at the meeting.
Yeah, please.
That
I want to
use later for recording. Go ahead, Don.
You can't do that. That's illegal. It's illegal. Shoot. You have to get their permission. Unless you're in Washington, D.C., for some reason you can record anybody and it's okay.
Shocking.
I know.
Yeah, sure.
All right, here's what I'm going to guess. I'm going to go out on a limb, but it's not a limb.
No, he asked you what questions should he ask
I'm going to say,
them.
I'm guessing this is an indexed annuity. That would probably be the first question. Is this an indexed annuity? There's question number 1. Question number 2. What's the... this is a much more fun question. We'll ask this one first. So how much is the commission on this if somebody gets in? Okay, that's question number 1. Here's the answer. You ready? I'm going to tell you what he's going to say. There is no commission. Question number 2. Well, sir, how do you get paid? Oh, you don't pay me. The company pays me. Okay. How much is the surrender charge the first year?
If I want to get my money back tomorrow, how much do I have to give up to get my money back?
My guess is they'll
That's the same
hem
as
and
a
haw
surrender.
and dance around it and say something like, well, this is a long-term investment, and we have a surrender charge to make sure people are serious about it and remain invested. Yes, sir, I understand that was what you were going to say, but what is the surrender charge as a percentage of the money? Well, sir, you can take out 10% each year without penalty. No, sir, that's not what I asked. What is the first-year surrender charge? 10%. Well, then, isn't that there to help pay you what the company pays you in case I get out too early?
You're asking a lot of questions there. I think the surrender one's a great question. Yeah. I think asking them what kind of annuity this is a great question. Then if they did admit that it was an equity index annuity, which they may or may not, by the way, they may have some other name because there's a million names for these things out there. Everybody's got a new name. But I'd want to know specifically, and I'd want the salesperson to explain how they make 5.5% a year guaranteed, however they do that without losing any money.
And here's how you're going to ask that. They're going to show you a chart that says, well, this is how much the stock market has made. And so it would have made this much. And then for these years, you wouldn't have lost. And then it would have done this much. And for these years, you wouldn't have lost. And you go, yes, but what about the dividends from those stocks? Do I get those? No, you don't get the dividends from the stocks. And the other thing is do I get the entire amount of the market's movement over that period? Or is there some complicated formula to determine how much I get of the market's movement over that period? And then the final question is, do you have any of the disclosure documents here before we take a meeting?
Which they will not have. And by the way, I don't know if we still have that article that you wrote, Don, which is very fine
it's
article.
Somewhere.
On these products, because Don actually went in and looked at how the money is invested. What percentage of each, these things are very complicated because they give you some sort of percentage of this index and that index. It's very, very convoluted method of trying to determine what your return is. And these aren't our numbers, but if you go back and look at people that have evaluated these, they've made somewhere between 3 and 5% a year, somewhere in that area. That, to me, does not sound like the return of the market.
As a matter of fact, I'm just looking, Don, on the article I wrote. If you go to I'm not talking real money. Go to realinvestingjournal.com, realinvestingjournal.com. That's the thing I put out. This was written several years ago, so the rates are a lot higher. This was probably written in 2012 or so, but most of the information is still reasonable. At the very bottom of it, I have a list of questions. What's the guaranteed interest rate? What charges are deducted? What's the term? What's the participation rate? All these things. There's a whole list of questions. You can just go there, go to Real Investing Journal, type in EIA in the search bar, EIA, and look for the article entitled Indexed Annuities, The Big Lie. Print that out. You can take those questions with you.
And is there a free dinner involved in all this?
Not for me.
No,
for Don, the other Don.
They've already talked to him, and they had talked to me.
Oh.
And I do taxes for a few of these people, so I told them it sounds like an annuity to me, and I don't know enough about them, but I know a few questions to ask, and I think you hit about 3 of the 4.
And the other thing you can do too, Don, is go to just type in FINRA and indexed annuities. I'm going to do it right now. And FINRA, the Financial Industry Regulatory Authority, has an investor alert. They actually warn about indexed annuities.
Okay. Excellent.
That would be something worth reading if you're considering making that investment.
They wrote a piece called Equity Indexed Annuities, A Complex Choice, and it's an investor alert, which is really a warning that these things can be dangerous.
Excellent. Okay. Right, I will get them the information, and I'll be there to ask the questions. So,
hey, Don, do me a favor. After the meeting.
Where's the wire?
No, better. After the meeting, call us back.
Okay, I'll do that.
I'd love a follow-up, okay?
Okay.
And so would others. Thanks,
word.
Don. All right, sir.
Thank
We
you.
appreciate it.
Wow.
Enjoy. Bye. Oh, yeah. No, a call back to hear what happened. I just can't wait. So excited. I love this stuff.
I find it fascinating about how these are sold. right? Because if you heard how they were sold, well, yeah, there's that. So the sizzle. But the 5.5% with no downside risk. Again, just think that through, stepping way back. If that were true, there would be basically no stock market because I just give you my money. You give me 5.5% a year with no risk. Why would I take chance investing in stocks and bonds, all the rest of that stuff?
And why would Treasury bills be yielding less than 0.5% if there was a say 5.5, 10 times the rate?
Tom and Don are talking real money.
There's a science to managing money. I call it financial physics, and you can get a free copy of my easy-to-read book, Financial Physics, at talkingrealmoney.com/free, or there's an interactive version available on Apple iBooks. It's called Financial Physics, that's spelled with an F, and you can get it free at talkingrealmoney.com/free or in the Apple bookstore.
Your guides to a really great financial future. Tom and Don are talking real money.
You ready for our phone number? 855-935-TALK, T-A-L-K, 8255. Before you find yourself on the horns of a dilemma, you should probably call
that's exactly
us.
where I was headed. Yeah, no, I think that's great that Don called so he can go back to his friends.
Well, they're friends, and he wants to save them.
They're also clients. He said he does a lot of their taxes. He's in a position where he could
does
really
it as a nice guy.
Offer some help. It sounded like that. He sounded like a nice guy. But anyway, we're not fans of that product.
No, and that product illustrates quite well one of my favorite words in the English language, particularly ever since I started on
Scam?
Financial Talk Radio. Very, very close. I love this word. Obfuscate. I love the word obfuscate. You guys all know what obfuscate means? For those of you who don't, it means
I don't know if I have a very good definition.
It means to muddle, to make unclear, to confuse, to baffle with BS. That's
and we're in the middle of a long period of that up till November 3rd.
Pretty much. I was not going to go there politically.
I'm sorry, I couldn't help myself.
But yeah, it's kind of true. We've been in a period of really serious obfuscation. But the financial services industry out obfuscates pretty much any other business in the world.
And let's talk about why, because we started the show talking about the 60-40, right? A ratio between stocks and bonds and how that's a balanced portfolio, every man's portfolio, it's okay. Except now all the experts are telling you, it won't work because stocks and bonds both went down in March, forgetting the fact that bonds had gone up considerably and already still have had a very good year.
And it was a pandemic.
I know, whatever. Okay, but it won't work into the future because you can't count on bonds going up when stocks go down, which you never should have counted on in the first place, ever. And so you need to find something. This is always what leads us to, okay, so that doesn't work, so what? What am I going to do as an alternative? No, I mean, that's what it always is.
I know. What's the alternative? People go, what should I do then? That's where Wall Street makes all their money. When people say, what should I do then? God, I sounded like Seinfeld for a minute.
Just for a very, very short moment.
Whoa, that was weird.
And so this is where the trouble always, for me, starts, right? Because what do they want you to do?
Something new.
Something new. And today's world, because even Vanguard's doing it, as much as I hate saying it, it starts with an A. Alternatives. Vanguard. Honestly, I'm glad John Bogle didn't live to see this because he would not be very happy. Let's put it that way. I think he's been gone for a year and a half or so. But alternatives, things like private equity, things like hedge funds, places that you and I, and yes, Don and I are just like you and I, are not investing. We don't put our money into these things because they're risky, because they're illiquid, because they're generally more expensive, and the track record is they have provided no additional return unless you got lucky and hit it out of the park and you are an early investor in Facebook or Amazon, right? And there are few of those people exist, and they can run around and say how bright they were. But in general, all of that type of effort, paying others, has just resulted in lower returns. And yet the industry wants to tell you, And by the way, this is how equity index annuities are sold, the bond alternative, right? This is a way to still get some income without risk. This is what they're selling you because this is what the business of the money business is all about. Monkey business, I almost said.
Yeah. Well, that would have been oddly appropriate.
Indeed.
And I got to tell you, these things are generally here. One of my beefs with them is a lot of the academics, even in our business, are saying, well, you know, they don't move in lockstep with stocks and bonds, so you should have some alternatives in your portfolio. Yeah, maybe, but they don't fit my definition of real investments. And the thing that bugs me most about them is their incredible cost. And costs are difficult to overcome unless there's a definite benefit associated with those costs, and I'm not sure it's there. So, hey, we're talking about your money, and we want you to manage it better, so give us a call, 855-935-TALK, 855-935-8255.
Tom and Don are talking real money.
Everybody needs help with their money now and again, and if you need more help than we can give in the course of this podcast or show, set up an appointment with one of our advisors for a free actual meeting with no obligation and no high-pressure sales pitch. Just go to vestory.com, that's vestory.com, or call 800-386-3004.
Reality radio for a really great future. We're talking real money.
In my zeal for stopping these equity indexed annuity sales, because I just don't like the people who sell
they're
them.
way up this year too, by the way.
Well, because everybody's looking for no risk. And of course, the return of the market with no risk.
Oh, sure.
All right, like you can have that. Just to help all of you, TalkingRealMoney.com. If you go to TalkingRealMoney.com, I have this grid of smiley, happy people and pictures and things. Well, there's a woman there, an older woman with earbuds listening to our show. She's listening. And because she's an inquiring mind, she wants to know more about some of the show topics. So every once in a while, if there's a show topic of note right during the show, as it's going on,
whoa,
in real time, I put up links on the interwebbing. And so if you go to her picture, you click on that smiling woman's picture, or it's under the it's Explore is what we call it. Go there, and I've got a link to the FINRA Equity Indexed Annuity Investor Alert and to my old EIA piece, my Equity Indexed Annuity piece from a few years ago.
And how hard is it to find us from the website? Because our friend JD, who's a regular listener, said, I had a hard time finding you guys.
Well, we
chatted a couple of days ago, and he said, why make it so hard?
Well, one, we do a radio show to inform.
Yes, that's true. It's not a pitch.
If it gets us clients for our firm, groovy. I'm happy with that. But
you've been watching the Chicago 7 or something?
I've been thinking about it.
Now?
Yeah. But yeah, we do have a link. If you go to the bottom of the page on Talking Real Money, it says Talking Real Money is an educational service of Vestory. You can click on that. That's a link.
Then you can find us through 19 more clicks or something.
Well, no. The other thing you can do is go to Talking Real. Now, this is the place where I think you get the most bang for your buck, because most people are either looking for or need to be looking for help with their money. It's a fact. Not many of us are good do-it-yourselfers. Even the world-renowned Paul Merriman has someone who helps him with his investing, and
he does. He has an advisor.
He knows how to do it. So the best place to go is talkingrealmoney.com/help. It is, and you'll see a park ranger with her gun. That's Invest with Help. But you go there, and there's a lot of really good information. If you go to talkingrealmoney.com/help, let me just go there and tell you what's there.
Because we have a list of people that we think you could trust, right?
Yeah, exactly. See, we tell you. When you put in you don't put .help, you put /help. It works a lot better. First,
talkingrealmoney.com/help.
Very first thing you see is how to interview an advisor. That's very helpful. Then a piece on fiduciary advisors. Then a spreadsheet that I put together. A lot of work. I went through the Form ADV Part 2 brochures of Ameriprise, AXA, Edelman, Edward Jones, Fisher Investments, J.P. Morgan Chase, LPL, Merrill Lynch, Morgan Stanley, Raymond James, Voya, Wells Fargo, and some little company called Vestory, and showed you how much they charge to manage your fee-based portfolio. Oh, well, the only one that's really, really, really stupidly high is Ameriprise. They're at 3.07%.
Oh, man.
Now, Merrill's lowered theirs down to 1.8.
Okay, which is still
Voya's at 2.5. Wells Fargo's at 2.5.
Interestingly enough, this discussion always brings the most email questions to me, and people always call, "Well, my money's at blank. What do you think?" And I have to say, "Well, how much are you paying? What kind of investments are you in, et cetera, et cetera." So it's troubling.
And then right next to that, we have Check Out These Advisors, which is a few good advisors, both in the Seattle area. We've got 5 of them in the Seattle area, and then a couple around the country. And then we have a piece of Vanguard paper that tells you about the value of having an advisor. And this is a paper done by Vanguard. And then finally, if you want to meet with us there, finally we got to the Vestory link, and you can click on that. There you go.
All right. Okay.
Did I cover that well enough?
Yeah, I think you covered it. I don't know well enough, but you covered it nonetheless. So, I mean, we were talking a little bit about alternatives. Maybe we should spend just a couple more minutes on that ahead.
Ooh, I think that's a good idea. Particularly, we really didn't get into the fees and the complexity of some of those things and the tenor of some of those things and what some of those things actually are. What are these elusive alternative investments? 855-935-TALK is our phone number, 855-935-8255.
Tom and Don are talking real money.
If you don't have a financial plan, well, sometimes you just need a little help getting started. And we offer that free help to anybody in a meeting with one of our fiduciary advisors. To set one up, just go to vestory.com, vestory.com, or call 800-386-3004. There's no obligation, no cost, and I promise, no sales pitch.
For your real life and real future, Tom and Don are talking real money.
Hey, welcome back to our little get-together called a talk show. It's about, that thing you deal with all the time called money. Probably want some more of it. You definitely need it to be comfortable in the future. And we want to help you have more of it without getting ripped off and really kind of build that secure future that we all want to have in retirement. I mean, I'm working really hard to in the next 5 or so years to semi-retire comfortably. You got to work at it. It's a job.
Can we retire you earlier? Is that possible?
My feelings are really hurt.
I'll make a few phone calls this week, see what I can do.
935-TALK. Good thing I have a contract.
You do have a contract.
855-935-8255. Because, it was just in case of this.
That kind of thing,
that contract, just in case.
Pretty smart.
I covered the bases.
Send lawyers, guns, and money.
Now, let me tell you a little something about our phone number. Here's what always happens.
Oh. Yeah.
If you're listening to the podcast, you hear these just 36 minutes of the show, which is what the show comes. An hour of the show becomes 36 minutes after we take out the commercials and traffic and news.
And it's usually just Don because he edits my stuff out too. So if you're hearing me, he made a mistake.
No, I just take out all the smart aleck stuff, which really reduces it by like 15 minutes. What was I going to say?
You were going to say call now.
The second hour of the show, which is the Tuesday podcast usually, is our busiest hour for callers because people go, I can call? Yeah, you can call.
Call now.
We like it when you do. 855-935-TALK, 855-935-8255. The other thing is if you wait till near the top of the hour, near 4 o'clock Eastern, 1 o'clock Pacific.
Guess what? You wait.
And you have to wait. That's not any fun.
They do the news or something. They think it's important, apparently.
We've been talking about alternative investments. And, Tom, let's do this first. We talked about alternative investments, but what are alternative investments? What are some? Give me some examples. Give our listeners some examples of alternatives.
How about oil and gas limited partnerships?
That would be an alternative. That's a good
one.
Yeah.
How about illiquid, non-traded real estate investment trusts?
Ooh, that's another one. Yeah.
Yeah. How about the best performing hedge fund for the last 5 years?
Okay. Commodities.
How about a firm
commodities.
Commodities or private equity, firms that invest in the up-and-comers. I mean, there's a lot of discussion around this, right? Because fewer firms supposedly are going public, although now we've learned that more firms have gone public this year since 1999. So that the trend didn't hold. That's what I always find. This has to continue to happen. Things like that you and I can't invest in because it takes millions of dollars to do it, right?
Right.
Or you have to be part of a club of some kind that allows you to be in there to do that. And the idea here is these are investments that are unlike just investing in a globally diversified portfolio of stocks or in fixed income or bonds. The idea here is you're exposing your money to other types of investments.
And, these, just curiously, these investments seem to be very similar to one of my favorite words, which is obfuscate. They're kind of obfuscational, but they're really, another O word I like is opaque. These investments are opaque. A non-publicly traded real estate investment trust can make all kinds of claims, and they can tell you that their value is X when it's really X minus Y minus Z, because there's no market for them, and public markets fairly price securities on a minute-by-minute basis.
Yeah, and so going back to the non-traded REITs, which really were very, very popular 15 years ago. I don't know how many of them are sold today, but I know
still
they're
quite a few.
Sold.
Yeah, they're sold.
Yeah, I mean, the idea here is you have access to a large amount of interest or dividends, and supposedly your capital is growing, right? In other words, the investment in the properties that you're in is growing as well. The problem has been just what you just said. Number one, illiquid. Number two, generally expensive. And number three, the promises are most of the time not lived up to. Most of the time.
Right, because there's this nasty little thing that intrudes on someone's propensity to be honest, and that it's a G word. It's called greed. Greed.
They make a lot of money on these.
To reduce people's desire to tell the truth, the whole truth, and nothing